Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to the week that was. Indian assets came under pressure this week amid a weak global sentiment ahead of the US Fed's policy meeting to be held next week. After a positive start, Indian equities remained under pressure towards the later part of the week, posting losses in the last three trading sessions. The Nifty index fell 1.7% over the week and reversed the gains of the previous week, underperforming most regional peers. With this week's loss, the Nifty index year-to-date 2022 price returns stood at 1% and the negative gap from its October 2021 peak increased to 5.1%. Broader markets performance was mixed, with the Nifty Mid-Cap Index down 1.7% and the Nifty Small Cap Index down 1.2%. Among sectors, utilities and banks were the best performing sectors with gains of over 1%, while realty and IT were the worst performing sectors with cuts of over 3% and 7% during the week. Indian fixed income markets came under pressure this week with bond yields rising higher across the curve amid rising US bond yields and cautious market positioning ahead of the US Fed's policy meeting as market participants weighed the outlook on interest rate hikes. For the week, the 10-year Indian government bond yield rose 12 basis points to close at 7.23%, while the 3-year and 5-year Indian government bond yields rose over 20 basis points each during the week. The INR depreciated during the week amid a strengthening US dollar and rising US bond yields. However, improving foreign investor flows and lower crude oil prices capped INR losses. For the week, the INR fell 0.2% to close at 79.7 per dollar. During the week, we also had a few domestic macro data reported. The first data was on India's CPI inflation, which rose 7% year-on-year in the month of August, higher than the market consensus estimate of 6.9% and last month's reading of 6.7%. The rise in headline inflation was driven primarily by food article prices, which rose 7.6% year-on-year compared to 6.7% recorded over the previous month. The second data reported was on India's industrial production, which grew at a slower pace of 2.4% year-on-year in July 2022, compared to the last month's reading of 12.7%. Output growth slowed for manufacturing and electricity sectors, while it declined for mining. Sequentially, industrial output fell by 2.7% after a 0.5% rise recorded over the previous month. The third data reported was on India's trade deficit, which remained elevated at USD 28 billion in August 2022 compared to USD 30 billion recorded in the previous month. Imports rose 37.3% year-on-year to USD 61.9 billion, while exports rose 1.6% year-on-year to USD 33.9 billion. Over the coming week, markets are likely to remain volatile as investors' focus remains on US Fed's policy meeting. Market consensus expects the US Fed to raise policy rates by another 75 basis points for the third time this year. The Fed's forward policy guidance is likely to set the tone for global markets for the coming months. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.